This is SFNet Presents In the Know with host Barry Bobrow, sponsored by Hilco Global.
Well, welcome everybody to the next episode of the In the Know podcast series. I'm your host, Barry Bobrow. Very special guest today. Very special guest, my good friend and SFNet colleague, Rich Gumbrecht, the CEO of the Secured Finance Network, is going to join today. And we're going to talk a lot about what's been going on with SFNet, in case you weren't paying attention the last couple of years, a lot of change. And then what Rich, from a very unique position, sees in the industry going forward, and then some of the more recent activities of SFNet. So let's bring Rich on.
Hey, Barry.
Rich, welcome to the podcast.
Yeah, it's fun to be one of your guests. I've seen what the results have been so far. The feedback has been excellent, and I'll try not to screw it up for you.
Well, if you do, we can just edit those parts out, Rich. So, we've got all that technology working. Anyway, let's get after it, because I'm really glad to have you here today. We talk all the time, Rich, but I think for folks who don't know, let's start with, for folks who don't know you as well as I do, just give a quick, you've got a long background in lending and equipment finance that brought you roundabout to this job. Just give folks a sense of where you've come from to this position.
Okay, so the short version is I've been a lender for most of my career. I spent a number of years at GE Capital. I ran a electronics finance business, a vendor leasing business, a commercial finance platform, and actually their first trade payables platform. And so had some experience with a lot of different commercial asset classes. I left and started a business with partners, an independent finance company, which was sold to a bank. And then my job at the bank was building the commercial side of the bank, which is when I met you, because we were looking to get into asset-based lending. And this was probably...
Oh, God, it's my fault. Oh, my.
Yeah. Well, people say you don't grow up planning to be an asset-based lender. I wanted to be a fireman or an astronaut. Or a commercial finance executive, so I guess I'm living the dream. So that was my role, was building out the commercial side of the bank, and then the bank was acquired by a big pension fund, and that was my exit from the bank. And I was going to start another commercial finance platform, but some folks had asked me to come in and take an interim role as the...
You're the interim that never left. That's right. I'm personally glad that you did not. So
yeah, no, I came in and I thought, you know what, this is great. I really liked what I was doing. I felt like it was making a big difference. So I've been here about 6 years, and I'm glad to have been in
and
this
I'm
one.
Sure when you joined, you said, boy, there's going to be a pandemic that's going to hit, and we're going to have to reinvent the trade association at that point. So I want to be there for that. What would you say? Because the last two and a half years have really been taken up with the reaction and the follow on. What would you say the biggest difference between SFNet pre-pandemic and kind of where we've been, where we are today?
And well, there were some things that we were focusing on pre-pandemic that I would say that the pandemic accelerated a lot of stuff that we were already thinking about doing. We wanted to expand our engagement with our members, and one of the positive byproducts of that event is we started offering virtual programming right away. And the benefit of that is we had a couple of thousand people participate in the virtual programming that never could have participated in some of the live events. And that's operational people and folks that don't get out to the conferences. And that gave us the opportunity to start providing more content to that cohort group, or several cohort groups that we hadn't reached at that point effectively. We accelerated our education programming, we accelerated our webinars, and we started doing more things with data and pushing those forward. And I'll say it was the kickstart for what we've been doing in advocacy as well, because we got right in the middle of all the PPP and idle issues, and
including taking advantage of them ourselves. Exactly. Yeah.
Well, yeah. So it was a catalyst in a number of ways, and I tell you that I would say that we always thought we had a charter and a mission to put capital to work, and it was important for us to be relevant in that role to our members. But our relevance and and value and connectivity with our member base has never been higher. And I think it's because we kind of went through that together and dealt with a lot of that crisis and came out of it in a very positive way. So that's very satisfying.
Thanks, Rich. So certainly you have a very unique perspective because you have the opportunity to talk to big banks, small banks, everything in between, non-banks, factors, service providers every day. What would you say were the top of mind issues, the most important things that are going on in the secured finance business, and things that the trade association feels like it can engage on?
Well, I think you said it well, that there's a pretty broad group of people that are involved in what we refer to as our secured finance ecosystem. So it's the lenders, it's the service providers, it's the third-party intermediaries that all together help us deliver capital to the middle market. And I don't know if we've ever been in such a disruptive environment as the one that we're in now, and the speed of change is just so quick. 12 months ago, the 2-year treasuries were 29 basis points. Today I think they're 429. I was in London.
You're going to date this recording, but yeah.
Yeah, well, I mean, we'll see where it keeps going. We're being told it hasn't hit the peak yet. I was in London last week at a debt advisory conference, and the pound sterling was on par with the dollar, which was great for me in terms of making my money go further. But but who would have thought that we'd be in that position? You've got inflation still at elevated rates. You've got central banks all over the world, trying to combat that at the risk of driving recessions, broadly. And you look at that environment, and you see, and broken supply chains and everything that's come through the pandemic, and you see it seems chaotic, but it's also what this industry is designed to support. It's that when people need capital, this is an all-weather industry. We do reasonably well when things are expanding, but we're essential when things get tough. And so I see all this happening, but I also know that we have a way of managing disruption, which is actually the theme of our annual meeting this year. We'll continue to do that as we have in the past.
So when I've been planning for the national and also for the ABCC conference, the topic that keeps coming up is talent issues that all of our members, whether they're banks or non-banks or service providers, are struggling, I guess, because of tight labor markets, but other reasons as well, attracting and retaining the kind of talent that they need to do their business. What do you see there?
Well, we know that it is one of the primary needs of our members, is to address this issue, and so we're doing some things very specifically about it. Particularly as it relates to YoPros or young professionals, we've taken a closer look at how we describe or define that community, and it's really a bunch of communities. It's people under 40. There's such a range of experience and needs and interests that it's really too broad a term. But so our focus has been looking at new entrants who we consider to be anybody from -2 years in the industry, meaning in college, to 5 years into their career, and then emerging leaders, which is 5 years to maybe 15 years of experience. And they each have different needs and requirements. So for the emerging or for the new entrants, we introduced a guest lecture program where we go to universities and we teach a class on secured finance, and we do it with our chapters so that we can then link the lecture to internship opportunities at the chapters. And we also, through our foundation, offer scholarships and grants to the students, try to bring them into the industry that way. We also have we just did our first Great Places to Work issue of our magazine, which we're distributing now at 30 different universities to try to attract these students to come into the industry. And when they get here, we just launched a mentoring program that's the most professional.
I think you have a commercial for that as a mentor in the program. It's been a great first cohort and great program for the people involved. I agree.
Yeah, so they come in. We've got a way to kind of onboard them and bring them up to speed, and then we also have in the past year or two. Again, this is a focus of all these things that came out of the pandemic. We've introduced on-demand education classes that are free for our members, and we've seen the consumption of those classes go up 4 times just in the last year. And so that's all bringing these folks up to speed. But once you get to the point where they've got the foundation knowledge that they need to be successful, then it's about giving them opportunities to expose them to people who are decision makers and who can advance their career and help them get deals done. So we are offering subsidized rates to have people come first time to our conferences, and which is an important step in getting them involved. And the other thing is we're really pushing to get younger members of our different committees, which is how we get things done in the industry. And even Pete York, who's the president of the association this year from JP Morgan, personally got 10 people from JP Morgan who were in that under 40 category onto different committees so that they're having a hand in shaping our agenda, which I think is great.
Yeah. Rich, I've been involved, as you know, on the board of SFNet for a long time. And one of the things that I would say the biggest difference for those who don't pay attention quite as much to the governance and the leadership is if you were to look at the board members today and the committee leads and the people in the pipeline for that, it moves very quickly. You've got a much more representative group of the membership and a much more diverse group than we've ever had before. And when I sit in the board meetings, I feel that because of the breadth of ideas and perspectives that are coming. So I'd say, keep up whatever you're doing there because it really is, it's moving the organization forward.
Yeah, by the way, the diversity issue is another important imperative. We've set up a committee led by Betty Hernandez that in the last year did a benchmarking study for our industry so we could drive improvement on diversity. But they're the group that actually introduced the mentoring program specifically to be more inclusive and attract and help develop and retain more diverse talent.
Rich, let's change gears here a little bit. You and I have a shared passion, I know, because we talk about it all the time, for data and information as something that the industry needs and that the trade association can help provide. Talk a little bit about what you're doing from an SFNet perspective.
Yeah. So as I mentioned earlier, we have a market sizing and impact study that we had done. That was one of the first things I did when I got here because we really didn't have a clear view of the size and scope of the secured finance space, not just asset-based lending, but factoring, supply chain, and all the related asset classes. And so we undertook with Ernst & Young to do this comprehensive study to look at what that whole ecosystem looks like and size it and scope it and actually develop a primer. And that is probably the most downloaded resource that capital providers look at for considering deploying capital into our industry. And it was also meant for benchmarking and for planning purposes, but it's 4 years old. And so this year we're refreshing that study. We're going to update the numbers, and we're also going to talk about the industry dynamics that have shifted within each of these segments. And I know you're playing a key role in that, Barry. I working with the students at the Geese School, Graduate School of Business. Yeah.
We've brought in some students with your help from the University of Illinois graduate students to help us with the heavy lift. But I think that while the prior study was great and certainly got a lot of use, as we talked about it more and more after we released it, it was clear that we could improve it in the next iteration. Well, we're at the next iteration, so as soon as we can get that out, I think people will have a much better feel for the context and the size of the business, the subsectors within it, and maybe it's just as important, the methodology that we use is what I hope people will focus on, because there's no right or wrong answer to it, but people do build business plans off of these kinds of numbers. And I think it's a perfect place for the trade association to be, to try to provide that kind of data.
Yeah. Well, and so we also have, as you know, our quarterly and annual data reports that we have members report to, our factoring members and our asset-based lenders, and that gives you a regular cadence of information that you can use to also track trends. And our last quarterly report that just came out showed that utilization rates were back to pre-pandemic levels, which is an encouraging sign. And we also have in that a confidence index that we look at the next 3 to 6 months and how people feel about hiring, credit quality, the economy in general, and demand for our products. And those are also pointing in the right directions. Actually, the economy is not pointing that way, but the reciprocal of that, which is demand for our products, is up. So we're kind of in this Goldilocks kind of situation now, where portfolio quality is still outstanding, and demand is quite high. So from that perspective, things are good. But we have our forward-looking market pulse study that we do every twice a year. We had a new data issue of the magazine this year, which added a whole bunch of sources of information, people actually volunteering information on their individual company performance, which is great from the standpoint of us being able to be more transparent to everybody who's looking at the industry. And so we're going to continue to do more of these types of things, more robust deal databases, and in general content that is going to keep people informed for basically for every constituent group.
I think it's great. Rich, your passion, your unique passion is around advocacy. You've spent a fair amount of time on it, and I think you have some big news for people who really get into the weeds on advocacy. Talk about the state disclosure laws. Victory.
Well, hey, I don't know if it's victory. The way I refer what's happening at the state level is kind of, the barbarians are at the gate, and our job is every day to try to repel them. California is the first one to actually get their new regulations put forth and go into effect in December. And we had made some progress, nominal progress on what has to be reported, but there's still fundamental flaws in that legislation, and there are many states that may follow who still have some of those flaws. But the way that we're dealing with it is, for our members, we retained a law firm to help us break down how to calculate the APRs, which are part of the regulations. We also brought in a specialized firm that is an expert in the consumer APR calculations, which are very complex but are part of the regs. So that guide will be available within the next couple of weeks, and that'll help people prepare for what's coming. And we're trying to get ahead of that curve, so we've got more resources deployed to try to preempt that, even at the federal level. Another thing that's, I would say, something that's of interest to this community is we have got verbal approval from the SBA on a new subordination form for the EIDL loans that will extend the factoring special subordination form that the AFA did such a fine job working on to other asset classes within secured finance. And we're told that that's going to be implemented shortly. In fact, they've shared with us what that looks like, but they just haven't given us a firm date because they're training their servicing centers. But so that's a win. So that's time that we spent on that.
It's effort. A good win, Rich. You're being low key. If that goes through, that's a great example of what the trade association can do. And credit to you and Hamid Namazi for working that one through to where we are.
Hamid, John Helfat, our general counsel, co-counsel. It's a lot of, again, the way we get things done with the nonprofit trade association is through the volunteers, and we all have aligned interests in getting this stuff right. So we have some really terrific people that participate in these efforts.
Rich, it's hard to believe, but we've got the annual convention coming up in November in Austin. Talk about what we can expect. Why should people come?
Well, so the theme is mastering disruption, which obviously is a timely subject, and the primary reason that I would say before getting into the content is that everyone's going to be there. we have
Right.
we actually, the registration is looking great. We're back to pre-pandemic levels, and so it should be really energizing and good time for everybody to reconnect. But the content is terrific. We've got geopolitical guru Peter Zeihan is going to talk about what's going on in the world with Russia and Ukraine and all the changing trade and supply chain related issues. And the guy's got a great track record for getting it right in the past. And so he'll be terrific. We also have Anusha Ansari, who leads the X Prize Foundation, whose mandate is to solve the world's most greatest challenges, like being able to provide drinking water to everybody on the planet, basically things that could change a billion lives. And so her message is very inspiring. And we have our town hall meeting on Friday morning, which is always a favorite with Rob Westcott and Trevor Williams, two leading prominent economists who have intimate knowledge of our industry, so they can break down what's happening and apply it very specifically to what we're doing, as well as break down the results of the midterm election and talk about what that means to us. Beside that, the panels are going to be led by leaders of all groups within our space, the big banks, the small banks, the big independents, the smaller ones, the asset-based lenders, factors, supply chain companies, talking about market dynamics and how that's affecting their strategies. And we'll spend time on supply chain issues and opportunities. We'll talk about energy and the evolution of the energy space. We'll have a panel on fraud, which is timely when things start to get tough. And we've got a bunch of social opportunities, networking opportunities, receptions, charitable events, fun events like golf and charity run. And so it's going to be packed with a lot of fun stuff.
More important than ever to get together, and the early indications are it's going to be a great networking event on top of all the content. So looking forward to it. Rich, let's finish this on a look forward note. So with all of the change, we're back in person. What do you think the big focus for the next, from an industry standpoint, the next couple of years? What do you think the couple of issues will be that we'll all be talking about?
Well, I mean, I think unfortunately, we're in the early innings of what's going on with the economy and the changes of around supply chain disruption and inventory disruption and redrawing some of the geopolitical lines and rising rate adjustments and all of that. So I think everything that we're focused on now, providing timely information, getting people together to discuss these issues, putting out white papers. I think one thing in particular that we're going to be spending more time on is that working with the universities like you're doing with the University of Illinois, we're going to publish white papers that are relevant to our community. So look, at the end of the day, we're going to focus on trying to engage as much of this community as we can. And the way we measure the success of our that we're having against our mission is we look at engagement, we look at net promoter scores as proxies for value that we provide, and our expectation is those numbers will continue to move up. And if they do, that means we're doing what we're chartered to do, which is help everybody put capital to work.
That's great. Let's finish on that. Thanks, Rich. Been great talking to you as I do frequently, but this time we've got it on record. And I look forward to seeing you in person real soon. If not sooner, then we'll be in Austin together.
Yeah, great. Looking forward to it. Thanks, Barry.
Great discussion with Rich Gumbrecht, the CEO of SFNet. There's clearly a lot going on, and Rich went through it. And when he goes through it, and I know Rich very well, when he goes through it, he makes it sound easy. But as somebody who works with him every day, I assure you, it is not easy. He's passionate, he's methodical, and he has taken the organization very far. So I hope you take a chance to listen to all the things going on with data advocacy, the conventions, the in-person, the online content, and also the broadening of the reach of the organization and the redefinition of the mission to be a much more inclusive. And I see it every day, and I think Rich has a lot to do with it. So I hope you share that. Rich did not say the most important thing that I think SFNet has done, which is sponsoring this podcast, the In the Know podcast. So I want to thank SFNet for all of the things that it's done for me over the last several months as we put these podcasts together. I want to thank Hilco Global for its ongoing sponsorship of the SFNet series. And I look forward to seeing you on the next podcast. And I look forward to any feedback you have. Send me a note, give me a call. And that's it for this episode.